Hello, this is the crypto day morning for the date of Wednesday, the 8th of August 2018. Welcome, my name is Derek, and like always, all trades, all bets, and of the such within your own risk, own reward. For me, any of the selling that I see happening, well, that's where I'm taking the risk from on the long-term time frame, because I'm saying that this rally that occurred way back when, which was in 2015, the one that went from about under 200 to almost 20,000, is the real move. But markets go up, markets go down. It's been in a very big correction. It looks like 2018 might be the correctionary year. For this thing may not turn around until the end of the year into that of 2019. And even the bear market could continue for another full year if it remains in a slow down trend. Of course, within the risk, stuff like another tulip mania, of course, this one breaking the bar for such a case in extremity, would definitely be such something that could come into place. I am betting via my trades in my portfolio that will not be the case. And if this thing happens to go down to 3,000 or any of those types of levels, then you know what? So be it. That's what markets do when they go up, down, because you go from 150. Well, where did you come from on 150? Oh, you came from 1,200 after it had a move from 67 up to 12, down to like one. We'll even say 200 because that's pretty much, but whatever. You can see you go down, up, down, up, down, up, and it's been going down. Really, there's only been two very good bear market corrections, or at least the decent anyway. This was a good one here, going from that of the over 1,000 down to like under 2, but mainly at 2. And it did so from the end of 2013, not bottoming until the start of 2015. So that was one full year. And we're not too far away. We got a full NFL football season to go, although preseason is on tomorrow night. But throwing that part aside, the technical analysis, when we look at this on multiple time frames, the 3-day chart, the chart that I'm most concerned about as far as this current bear market is concerned, which its 18 average test resisted the 18 highs on 2 occasions on its first attempt. It made a matching low with a pierce above. Then it got above the 18 in here, spent some time consolidating amongst such, failing on its 18 lows, and a matching low again to the February lows, this time instead of piercing above, piercing below. And then there's this one here, spending again a few periods above the level, and right now we're seeing early signs that it is piercing and not holding the 18. Key word of that is early signs. After all, a small pierce below. If you end up seeing this with a little line, you'd be like a candle like this, where it's just one of the wicks. You see that because that's where price was within that period. This has just begun. This is a new period on the 3-day time frame. So there's still, this will last until, well, the end of the week. Let's move this on to the next time frame. On the daily, it's decent size red down move, 6,500. When we look at the area of what I was looking at, which was the inverted head and shoulders neckline, even in this area here, it's broken through all of this area. This is not a bullish, this is not a positive sign that I'm looking at. When you have a key indicator, a key situation like this, like the inverted head and shoulders pattern as was such, to have its very good breakout through. It already did its pattern, if that's something that you're looking for, where you end up entering into things like the inverted head and shoulders patterns, like like you would say in here, and then you'd have your sell opportunities that would obviously have already come into place. So that pattern for the inverted head and shoulders pattern is completed. It's not. It's a then what afterwards. Well, then what is? It was unable to sustain what you wanted to see it do on the more long-term time frame, and that is start a pattern of higher highs and higher lows. It first failed to support the test of where it came from at around 7,400, and it's not doing so well here at this previous level around 6,800 on the 3-hour time frame, and this is where the top came from. So it was going sideways, and then you had the down move, a little bit of correctionary move in here, and then it made a new low, correctionary move again, monstrous new low, and then it corrected for quite some time in here, attempting to get out above this level. And look at the amount of red candles down, obviously breaking through this level. So it's going to correct back forward up at some point, but when that point comes into place and how larger this could get, time can only tell. Even on the single hour time frame, a little bit of time has caught up, because the down move here started yesterday at around 3 p.m. Eastern time, and really came down to about 1 o'clock, 2 o'clock in the morning, but has been going sideways within this declining band. This is one way of saying that there's been enough energy stating that the market is no longer as oversold as it was a few hours ago within this time frame. It's still deeply oversold long term and within this as it's playing through, but there's nothing stopping the market from going down anywhere further. Of course, we look at this on the daily. If none of this continues, we're looking again at support at around the 6,000 area. This is a big monstrous level, as talked about, as it is the area of support. This area market has been really just playing around, holding since the lows that occurred in the first week of February, over 6 months ago, within a mode that has not broken, a low that has not taken through. So it's had enough time where a move down to the 3,000 area would most certainly not be that much of a surprise. It could happen fast if it's going to happen, but the warning signs, or more better put, the probability odds for such an event to occur, period, or within the next few weeks, even days, go up substantially. Thank you for tuning in, and have yourself a great day. Bye-bye.